A market chosen, not chased. Cuanvesto, Indonesia cross-asset brief. Indonesia's market picture today is best understood as a rotation story rather than a headline story. The most important signal is not a single price move, but how capital is choosing where to sit, where to take measured risk, and what variables it is beginning to price for the next few weeks. Across Asia, the tone in fixed income has improved as investors lean more towards safety and carry, but Indonesia's bond positioning still looks selective. That matters because it shapes the two anchors of local asset pricing: the sovereign curve and the rupiah. When a region attracts more bond demand while one market remains more mixed, it often reflects investor preferences around currency risk, duration exposure, and confidence in secondary market liquidity during stress. The result can be a market that trades orderly, yet stays sensitive to sudden shifts in global rates or dollar volatility. Equities provide a complementary signal. While parts of Asia have been digesting valuation concerns, especially where technology exposure is concentrated, Indonesia continues to see targeted interest. That doesn't necessarily mean broad risk-in. It often means investors are choosing specific markets where domestic liquidity and positioning feel less crowded. In practice, this can support index resilience while volatility concentrates in individual names, making exchange oversight and market integrity measures more visible in day-to-day trading. A third layer is now coming from commodities. Indonesia's move toward gold export duties introduces a policy-linked variable that can matter beyond the metal itself. Commodity policy can influence trade incentives, corporate margins along the supply chain, and the way markets think about FX dynamics at the margin. These effects are rarely immediate, but they can become relevant when investors reassess external balances and currency stability. Cuanvesto takeaway: today's Indonesia setup is a flows-first environment. Bond allocation remains selective, equity interest is targeted rather than broad, and commodity policy is entering the map as a medium-term factor for sentiment and FX expectations. This is informational content only and not investment advice.